So the thing most real estate investors fail to do. I want to talk about this today. Essentially, it's called self-assessment. This is it. Self-assessment of your current portfolio. I hope I'm speaking to a lot of y'all today. So as we going through, I want to basically cover 8 different things to consider when self-assessing your current portfolio. And I know a lot of real estate investors don't even do this. And up until last year, if we're being honest, I didn't do it either. However, it's financially responsible to do so. All right. So the first one involves evaluating your financial performance of the properties, right? All right. So this involves assessing whether the property is meeting or exceeding your expected cash flow, yield, and appreciation targets. Usually what we do, and I used to be this way too, buy a property, you just sit on it, you just collecting your money, you paying your mortgage if you got one, paying your expenses, and that's it. But you never really look back on the actual performance of the property. You want to compare like the actual returns with the initial projection you had when you invested your money, right? If there are any discrepancies, then you need to identify the reasons. Could it be market conditions? Could it be property management issues, unexpected expenses, etc.? It could be a lot of different things. The key here is identifying what it is if there is a discrepancy. At the very least, you just want to make sure that you're at least tracking your performance. A lot of people, I'm telling you, they just buy the properties and then they don't have good record keeping. I told you all about this one right here. This is what I use. I've been using this since 2018. It's rentalhero.io, www.rentalhero.io. And that's my referral code. That's the property management software. Basically the referral code, it allows you to get a $10 credit. And it also, you could try for 30 days without even entering a credit card to see if you like it. That's what I did when I first started. And I like it. It's super easy. All I do is print out the reports, the P&Ls at the end of the year, hand them over to the CPA, and that's it. It's super easy. I tie all of the different properties to the various different bank accounts associated with that property. And when any debits or credits are done, I should say, I just categorize it. Was it a maintenance and repair? Was it, landscaping? Was it HOA fees? Whatever. And that's how I do it. It's simple. All right. So the next thing, market position and growth potential. Are your properties in areas experiencing growth or decline? You want to evaluate local economic indicators such as employment rates, population growth, and upcoming infrastructure developments. You know why? Because that can influence property values and rental demand. I think I told y'all, I'm pretty sure I told all y'all my story already about how the first house I ever bought in 2010, it was less than a mile from 100 and I'm sorry, less than a mile from 420 acres of vacant land. Well, a couple years after I bought the property, Warren Buffett bought the property, or his company bought the 420 acres, and it developed it like crazy, which caused my property value to go up like crazy. In addition, less than a mile away, Toyota moved their North American headquarters right by the house. So I sold it for 6 figures more than I paid for it. But like I said earlier, that's the house that I looked up on NAR RPR, and it's worth 200,000 more than I sold it for. So I'm just like, damn, that could have been life-changing money had I held out. But you live and you learn. That was 8 years ago. I had no idea, values would continue to go up the way they did. So I'm still happy with my decision, but I could have been happier. All right, number 3, cost benefit analysis of upgrades or renovations. Consider if investing in upgrades or renovations could enhance the property's value or rental income. Sometimes, like a relatively small investment in property improvements can significantly increase its market value or rental appeal. I have a property that I actually considered adding an ADU in the backyard, accessory dwelling unit. So basically, because the backyard is so large, it's so big, I considered putting another property back there. But I didn't think that the juice was worth the squeeze just because there's a limited amount of parking around there. And if I added another unit, then it's going to consider more headaches with the tenants. They already fight right now because of the parking situation. So I didn't do it. But just think about things like that. What could you add more square footage? Add another bedroom. Like, what would another bedroom do to your returns? Whatever it is, just consider the cost benefit analysis of different upgrades or renovations. All right. So number 4, risk assessment and mitigation. So you want to assess the risk associated with each property that you own. This could include tenant turnover rates, maintenance costs, changes in local regulations, and susceptibility to natural disasters. So I'm in Louisiana. I'm in an area susceptible to hurricanes. I understand it. I've been here all my life. I'm willing to take that risk. I just make sure I have the right coverages in place. Excuse me. I just make sure I have the right insurance in place, different mitigation strategies like that. Also, you want to evaluate your insurance coverage and just ensure it's up to date and adequate. A lot of times people are undercovered, so you want to make sure you have the right amount of replacement costs or dwelling coverage for these particular properties. Um, a good insurance agent will help you with that. High, you see on the screen turnover rate. So like high turnover equals higher operating costs to continue to turn the property. Every time somebody's moving out, you have to get it ready, and that costs. You got vacancy because nobody's living there. So maybe you need to assess why the turnover rate is so high and just figure out a plan to mitigate that risk. That would be an example. So what that was. Number 4. All right, let's go to the next one. Number 5, portfolio diversification. We talked about diversification earlier. It can help mitigate risk and stabilize income, especially in changing market conditions. So some things you might want to ask yourself, like, do I have too many properties in one area? Am I too reliant on private pay? Like maybe I should consider adding Section 8 revenue to my income stream. Like I have a few Section 8 tenants, and that's okay. Like Section 8 income coming in. I'll tell you what, during COVID, when a lot of people lost their jobs or, followed the government advice and stopped paying, I was still getting paid. So you might want to consider that. Nothing wrong with Section 8. They pay on
Anthony?
time. Antonio, what's up? Somebody just called me?
Antonio?
Yes.
There's a question in the chat. How often do you analyze your property insurance?
Annually, every year. I shop just in general. I shop insurance every year, not just for investment properties, but for my house as well. Because if you don't, the insurance company is just gonna keep bumping up that premium every year, and you're just gonna keep renewing. So you gotta shop around, otherwise they're gonna just take advantage of you. Because I forgot what the statistic was. It was a huge number, like maybe 77% of people don't shop. So whenever they get their renewal, they just pay it. And if you think about it, almost every time that renewal comes through, it's higher than what you paid last time. So these insurance companies not dumb. If they know that people are not going to take the time to go and research, and shop around. But I do it every single year for every single property, no matter what.
What do you have in your cost benefit analysis for additions or improvements to your properties? Like what are like the variables in that?
So that would depend. That would depend on the property. So for instance, if let's say you own a 2-bedroom, but the property is big enough to add on to it, right? Add a 3rd bedroom and rents. The difference between a 2-bedroom and a 3-bedroom rent is significant enough to where it makes sense. So you would have to just run the numbers and see. This is just an example. You would have to run the numbers to see how much would it cost to add on to this unit, and then would you make that back on the rent that you can charge now that is a 3-bedroom. So whatever it is, whatever you determine to be the situation, you have to run the numbers and see if it makes more sense or not to do it.
So using that example, would you do that over like a period of time? Like you said, short term versus long term. Would you do that over like 1 year and then 5 years, or just using that example?
You use an example adding a bedroom.
Yeah.
So in this example, you would have to consider how long you plan on holding the property too. Because if you're gonna outlay that kind of cash to add a bedroom, like obviously you want to make a return from it. If you holding the property short term, you're probably not gonna make that return. You're gonna spend a good chunk of change trying to add a bedroom, right? I don't know. I'm just throwing that out there as an example. But you would make sure that you own it long enough, and that's all the numbers you have to run. Just make sure you own it long enough to get the return from that. And you can do different kind of numbers. I've been practicing lately. I'm trying to get my commercial game up, my commercial knowledge with present values, future values, discounted cash flows, all that kind of stuff. So that's the kind of analysis you would have to do to figure out if it's worth it or not. All right, what we got? Number 6. Number 6, exit strategy and timing. So consider the timing of potential property sales. You want to look at the market conditions. Like sometimes selling the property at the right time can maximize your returns, allowing you to reinvest in more lucrative opportunities. In general, I'm a buy and hold investor, and my plan is to hold for infinity. Honestly, I don't plan on selling. However, there may be situations where it makes better sense to sell. You won't know unless you're completing some form of self-assessment. Like I said, you may be thinking like you making money on these properties, but when you do the numbers and review your analysis on the properties, the performance of the properties, you might surprise yourself. You know what I mean? When you compare it. So that's something I hope. I'm not done yet. I'm almost done, but that's the biggest takeaway I hope you take from this is that you do some type of analysis on your property just to make sure you're making what you think you're making, because it may not make financial sense anymore. Maybe, the expenses are starting to creep up on you too much for whatever reason, taxes, insurance, I don't know. But until you do the numbers, you won't know. So you want to see what did you want to get out of it when you bought the property? What that cash on cash return you was hoping for, and are you getting it? So consider that. My favorite is an infinite return. I like when I can get the property and cash out refinance and pull all my money out. And then that means that, from that point forward, it's an infinite return. I don't have any more of my money in the deal, so I'm making an infinite return. That's the best way to do it if you could do it that way. It doesn't work on everything, but on every property, but you could try it. All right, number two. I say number two. Number 7, tax implications and estate planning. So you want to review the tax implication of holding or selling your properties. What I would say here is just consult with tax professionals to understand the impact of potential sales, and you want to explore the different tax efficient ways of managing your portfolio. Y'all know real estate offers a bunch of different tax benefits. Not only can you write off the mortgage interest, the property taxes, but also the depreciation. So you want to have some kind of accountant, some kind of tax professional, CPA, whatever, on your team where you can bounce questions off of, because everybody's tax situation is going to be different. So you want to be able to throw those tax situations, tax questions off of that person to help guide you in your decision making. Also, you want to consider how your real estate investments fit into your broader estate planning. Let's say you're investing in a syndication. That's where basically people pool money together to buy large assets, usually apartment complexes, things of that nature. And as you know, when you're getting into these type of deals, they take advantage of cost segregation studies and have bonus depreciation applied right off the bat. So what that does is it allows you to have a significant amount of depreciation, like passive losses up front. So let's say you did this, right? You invested in a syndication. You know they're going to do a cost segregation study. So you're going to have a big loss up front, paper loss, tax paper loss, so depreciation loss. At that same time, you may have a rental property that you want to sell. So maybe you could do it all in the same year, and that way you could benefit from the passive losses on the syndication to offset the gain on the rental property, because all rental property by the IRS code is treated as passive. So unless you're a real estate professional, which there's some specific rules you have to meet for that, you consider when it comes to income from these rental properties, it's considered passive income, not active income, unless you're a real estate professional. So if you have passive income, you have a passive gain from this sale of the property, you can offset the gain with this big old tax loss from the syndication. So all that stuff right there, everything I'm talking about just requires some type of planning and thinking through it. Talking to somebody that's qualified, professional, that can help you with this. You definitely got to have a key, like an accountant or somebody that's familiar with this stuff on your team as a key person to have. And the last one is just alignment. So you want to make sure you align with your long-term goals, your portfolio. So just reflect on how each property aligns with your long-term goals and your personal financial plans. You should focus primarily on income generation and asset appreciation. That's how you build wealth. This analysis basically can help you gauge whether a property consistently meets your target cash flow. Additionally, it can consider the potential for rent increases due to different market dynamics or just property improvements, as we talked about before. As y'all know, historical appreciation rates, you're probably looking at about anywhere from 2 to 4%, maybe 5% historical. Over COVID time period, it was significant, but now we're kind of like going back to the 2 to 5%. But they just basically offer a guide, the historical appreciation rates, they offer a guide, but it's vital that you consider like future growth prospects in an area. So like, I wish I was on this type of wavelength back in the day. I would have bought way more property in Dallas when it was at the bottom. Now it's at the top. I could have came up. I didn't know. But that's where we're talking about portfolios and planning. Like, you want to be thinking of that kind of stuff. Identifying an area that you think is going to grow over the long term and buying there. You want to basically just align your real estate investments with your personal finance goals, considering factors like retirement planning, wealth building, or just like liquidity needs in general. This holistic approach ensures your portfolio not only meets current financial objectives, but it also strategically, it also strategically positions you for long-term success and stability. And with that being said, I just want to conclude with this saying like a thorough self-assessment of your real estate portfolio, it basically is going to allow for optimized financial performance by identifying underperforming assets and guiding strategic interventions. So it ensures that your investments align with your long-term goals. In addition, just the process in general, it aids in effective risk management by highlighting potential market and property-specific vulnerabilities. So the main thing I want y'all to do right away, tomorrow, this week, next month, whenever, just soon, you want to just look at your portfolio's performance, see if it's meeting the needs of what you thought it would be, or what you went into it thinking, and identify what to do next. If it ain't, figure out ways to fix it, whether that's, trying to see how you can show up some of them expenses and keep them down, whether you can add on to the unit or get more rent. Maybe you're under market, like compared to other properties in the area. Whatever it is, just assess it first and then figure out a solution afterwards. That's my contact information. If anybody needs to reach out to me, that's the website. I forgot to put another one on there, but gotincomestreams.com. Gotincomestreams.com is my education company. I have different resources on there, but that's www.gotincomestreams.com. AntonioCousin.com is just my real estate agent website. So if you want to look at properties specific to Southeast Louisiana, that's where you can find them. And if you need to contact me, that's how you can contact me. So, with that being said, what y'all got for me? I'm ready for any and all questions. I'm gonna stop the share too so I can see you. There we go. Any questions? Anybody got anything?
Yeah, Antonio, I got a question. You mentioned earlier about having bank accounts for your properties. Like, how many accounts do you have set up for your properties?
So I have the accounts based on the LLC. So each LLC has an account, and all of those accounts are tied to my Rental Hero account. So whenever one comes in, I wish I could show you an example, but whenever, like, let's say mortgage payment is right. So I'll log in, it'll tell me a new transaction occurred, and all I'll do is take that, it'll tell me where it came from, what account it came from, what entity, and then I just categorize it as a mortgage payment and for that particular property. It's so simple, just a click of two buttons, bam, bam, and I'm done. And then at the end of the year, I just print out that P&L for the entire, like that one property, and I just print it out for each individual property and hand it over to the CPA.
Now,
That makes sense?
do you have set up for yourself? It makes sense. To me, do you also have set up for yourself something where, if you have like repairs, or if like major repairs, or if you have like a tenant is absent, or they're not paying your rent, like to cover yourself, or everything goes into like one big account?
All right, so I have multiple accounts, right, for each property. So if I have all of them, I have money in there as buffers, like reserves. So if
Okay.
somebody doesn't pay, I'm still gonna make the mortgage payment. I have it set on my auto draft because I don't want to forget to make a payment. There's too many to worry about anyway. So I have it set on auto draft. Each account has a buffer in there for reserves, and it just takes care of it. If something happens, like maintenance wise, I just pay out of that account. Give you an example. All this happened this month. Like I had to pay. This was what it is. Monday, Tuesday. On Friday, I paid for a new stove in one of the properties. I was upset about it, but nothing I could do. It's Section 8, and the inspector was coming on Monday. So I had to do what I had to do to get a new stove in there. So I paid for a new stove. Wasn't too happy about it. I posted in the group. I had January 8th, we had a bad storm come through here, really bad. Lightning hit one of my properties. I'm so glad it didn't catch on fire because it's a single mother with 2 kids. So lightning hit the property. What did that do? It took the tankless water heater control board out. It messed up the HVAC, and the blower motor on the HVAC stopped working, and something else happened with the coil. It knocked the motor out on the garage. It knocked the control board on the oven. The what's it called? The garbage disposal stopped working. Some of the outlets stopped working. All the cameras that she put on the property stopped working, like the actual control piece. So I thought, since I have connections on people that could do the work, that I was gonna save by not filing the insurance claim. The insurance deductible was $2,500. So I called myself being smart, thinking I could save doing it all on my own, like getting it hired out. Come to find out, I ended up spending $4,100 something. I was mad too. So all that came out of my reserves. So I'm starting the year negative. On this particular property, if we're being honest, I'm probably gonna make somewhere around for the year, probably gonna make somewhere around $6,000 to $7,000 cash flow. So that off the top just put me in the hole $4,100 for the whole year. So I ain't too happy. I hope nothing else happened because man, that's just a part of it. That's a risk that you take when you own property. You know, it's unfortunate the neighbors didn't get hit by lightning, just mine. But nothing I can do
Right.
about it. I just gotta take care of it and keep moving on. So yeah.
Gotcha.
To
Thank
answer
you.
your question, I know that's a long answer for for your question.
No, no, that was good. That was good explanation. Appreciate it. Thank you.
Yep. What else we got? Anybody else got a question? Anything else before we
Hey,
roll?
hey, Antonio. It's
What's up,
Lisa.
Lindsay?
Hope
How
you're
you
doing
doing?
good.
Long time no
Good,
see.
good. I know, I know. Nice to see you. Good to hear, join in just here. You give information all the time. So, quick question. Not familiar with Rental Hero. You say it's accounting software or is it property management software?
I'm gonna show you. It's essentially both. Well, when I say property management, let me backtrack. It's an accounting management software. It's a way to track. I'm gonna show you an example real quick. Let me pull it up. And while I'm pulling it up, Clay, you want to ask your question?
Yeah, do you have any you have properties that are out of town, right?
Nope, all of
Out of
mine
the
here.
state, all of them are there? Because what I was trying to find out is how does it work when you get properties out of state? How does that work whenever you for like writing it off as business expenses when you travel to there and stuff like that?
Oh, that's gonna be in a question for your accountant. But nah, I'm sure I know for sure you can do it. I have a tax service that I pay for. Man, actually, this is being recorded, so and it's going on my YouTube channel. But I would say this: I know for sure you can do it.
You
There's
can.
ways. You just got to make sure that you're documenting everything, and it has to be for a legit reason.
Yeah, document is key.
Yeah, like okay, I'll tell you this. So I have these people on retainer out of Vegas. Tax is a tax company, and they even said on one of the calls that you can like if let's say because you gotta think you gotta outsmart you gotta not play inside the box, right? You gotta how should I say this? They mentioned that let's say you're going to Vegas for the weekend. Okay, if you fit in a trip to their office on Friday and Monday, you can write the whole thing off. You stay the whole weekend, or some kind of way they said it. But basically, just make a trip to their office, talk about business, and then you can write it off. Like things. So the same situation, same thing, same scenario happens with your properties. Like let's say you're going out there to buy a property, you might not even have bought it yet. You're going out there to look at properties. Like you can write that off. I'm not a tax person, so definitely want to confirm that with your tax person. But that's just from what I know. That's how it works. I've never done it, but that's what I heard works from
Okay.
multiple people. And Linda, so this is the thing right here. So rental accounting software made easy. Y'all can see this?
Yeah, we can see it.
All right, cool. So essentially, it's
And
so easy.
Antonio,
Yep.
while you're pulling that up, I'll just comment on what you mentioned. So the weekend thing is if you visit, if you business, you can write it up prior to 70% of the trip based on days, and if you see
You cutting off, Harold, a lot. Is he cutting off to y'all too?
Yeah, it's I'm
It's
sitting
chat.
here like wait on that bated breath, and then he keeps cutting off. I know it's gonna be some good stuff.
Well, he was saying you could do it. It's just you got to do a certain thing. I think he was saying something about 70% of the trip maybe has to be for business. I don't know. But talk to your CPA, talk to your accountant, make sure you following the rules because you definitely want to not get audited on something like that.
Yeah, definitely.
And here's what I was trying to show you. Lindsay, so you could print out a profit and loss report for each individual property and it'll spit it out. It'll also, this is the cover page, but on the back of it, it'll show you like which like individual line items for each different transaction. You could scan receipts in there if you want. I never did it. You link your bank accounts. It's so easy. The cost of it, let me see.
It's not bad. I use it as well.
There you go. Per month bill annually at $129. So that I've been doing it since 2018. Since 2018. And don't forget about my referral code. It's 10116. 10116. If you use it, then we both get $10 off that annual fee. But it's pretty cool. I've tried something else. I think I tried something called Stessa, I think it was called. I didn't really like it. It was too, I like ease. I like stuff that's easy to do. I don't like all that. Like it was too complicated to me and too time consuming. I wanted something that's easy. All right, what
Great,
else?
thank you.
You're welcome.
And what do you use property software?
What you mean by property software?
Like property management software?
Oh, yeah. I guess you could consider, I use apartments.com, and on apartments.com is how I get paid. So I use it to run background checks, credit checks, all that stuff. And on there, if you set the tenant up, they can submit maintenance requests through there. Not all of them do it though. I self-manage, so a lot of them just hit me up directly, which I'm cool with too. Either way, I don't really care. I don't enforce one way or the other. But apartments.com is a good resource for that. If that's what you're talking about, like maintenance requests. Was that it you're talking about?
Yep. I kind of been looking at Buildium, another one. It's paid though, it's not free. But they do have, similar to what you just showed me, the accounting capability where you can pay out of there and they track your maintenance or your contractors or whatnot. So they have the accounting tracking capabilities as well.
Okay. So this is what I use. So I went to apartments.com, I clicked on manage rentals, and then if you scroll down, it tells you what it includes. So collect rent. The only drawback, and I'm used to it now, so it doesn't bother me. But like when you collect rent on here, it doesn't go to your account automatically. It takes a few days. So that's could be a drawback depending on people's cash situations. Because you may be collecting rent, but if you don't have a buffer in that account, you may not have enough money to cover the bills. So that's something to consider, but it's free. I'm sure they make their money some kind of way, like during that period of holding the cash. I'm sure they make money. They also make money when the tenant or the applicant, in this case, pays for the application and background checks, but it comes directly to you, so you get to screen it and review it. I never use this feature where you can create a lease. I never used this either, the tracking the expenses and stuff with the property, because I use Rental Hero. Maintenance request, I never used it, but I know it's there, and I know you can use it. But this is pretty cool. So you can put your property on here and it'll syndicate out to the different sites. So just another way of advertising your property for rent. So check it out. It's free to landlords. I don't
Hey
get I don't have
Antonio,
no,
I
huh?
use that software too, but I'm asking a question. Like lately, it seems like I know there's a delay in payments, but it seems like lately the delay has been longer than normal. Have you experienced that?
To be honest, I couldn't even tell you, man. I don't pay attention. I just get the money when it get there. I mean, how long you talking? How many days?
Normally, it's like 3 to 4 days, but the last at least for the last month, it's been closer to 7 to 10.
Oh, I've always thought it'd been like 5 to 7. So I guess it's different. It's different for
Oh, okay.
everybody. I've always thought it was 5 to 7 days, and I was cool with that. At first, I wasn't, but I got used to it.
Yeah, and it seemed like the amount too, like the smaller amounts, they go ahead and process, but anything big, you know, they hold it longer.
Okay, big timer. Nah, I don't know. I haven't paid attention, man. Honestly, I just like the thing is, like, I don't even log into accounts. I just wait to see. I log into Rental Hero and see what happened,
Oh, okay.
and that's how I know I got paid. And they send an email out too. When the tenant pays, the apartments.com sends an email of the status of the payment. So, and I have it set up to where automatically after, I think it's the 5th day of the month, it automatically charges them a late fee and all this stuff. So all that's automated.
Yeah, I get that set on mine too.
Yep. What else y'all got? Any other good questions before we roll?
Yeah, I got something. This is Clay.
What's up?
Well, first of all, yeah, I was the one who uses Avail. It's the same company now, but if you have a you call a maintenance request, and mine just call me too, but you can go in and manually put it in yourself. And it's helpful whenever you just want to keep track of, like, things that you spent and yada yada yada. So I basically will go on it and manually put it in, and I'll put notes on that I see, and also I'll follow up when it's done with notes from what they said. It lets me know how long I took to get it done. And I have Section 8 as well, so then I can always go back and say, hey, it only took me a day and a half to get your thing done. So it's really helpful. I use a lot of those things that are provided inside there, just because I want to know how it's done and how they do it.
Man, that's a great point. I'm glad you brought that up. I probably should do it more like that, to be honest. What I like about what you just said is it allows everything to be documented in one place.
Yeah.
Yeah.
So as it stands right now, the way I operate, I got text messages, I got email, I got a little phone calls. Like, I'm not documenting it the way you are. So that makes sense. I may actually even start doing that, because that makes a whole lot of sense for
Yeah, it's
documentation
helpful.
purposes.
Yeah, it's definitely helpful.
Yeah.
The question I have was your thoughts on home warranty programs. So I have two ways of thought process on it. One, I can put that money away myself in a high yield account over time, because I know that my hot water heater won't break until for another whatever amount of years, or I can say, hey, it's the 11th hour. I should just get one of these, knowing that something's going to break, and it usually will. And then I can utilize that warranty to, get the AC fixed, or, the HVAC unit fixed or whatever. I was
Yeah.
curious what you thought about it.
So my take on home warranties, from the investor standpoint, I don't get them. And really, because I feel like I'll be wasting money that I could be, that's a part of my return. By spending that money, I could be keeping that cash in house. And then I know enough trades to where I could get stuff done at a decent price. But however, that didn't happen with this last lightning strike. However, nor here nor there. When it comes to the realtor part of the business, I always get them for my buyer. I always negotiate. I try to negotiate for the seller to buy them for the buyers, just for that peace of mind. They're buying this property for the next 12 months of ownership, just for peace of mind. If anything happens, they can get that handled. And if they want to renew after that, then that's on them. But in general, I don't, get them, only because I feel like, just like with insurance, like they try to find a way not to honor the claim, like they try to find a way to deny you.
Yeah.
Like that.
So I've used, I'll drop a couple of names. Like, when I got my very first house years and years and years ago, I got the American Home Shield. It was garbage. It was just garbage. I mean, I had to fight them left and right, and then I was just like, forget y'all, no more. You don't get my money. But here recently, every now and then I listen to Turbo Tenant, and listen to a lot of content that they provide. And they had a seminar with a group called Avocado, and they seem to handle it differently, which is you can also use your own contractor to do the fixes that you want, which really, that right there caught me. And so I've been in talks with them and negotiating with them, mainly because I did listen to the Turbo Tenant conversation. They gave you like 10% off. So I'm like, well, if you give me 10% off, you can give me. And so I'm just in negotiations with them right now. But I'm curious if anyone on the call has ever used Avocado at all. See if they can give me insight. Yeah, it's really it's a fresh take on home warranties. So that's why I was like really into it.
That seems pretty cool. I know I had American Home Shield, and I had a bad experience with them in 2012. Never used them again. They didn't want to replace my hot water heater that I had to replace it. And I spent $1,400. I was mad about that. 2012. That's how long ago it was, and I'll never forget. I never used them again since then.
Yep. Mine's been 2006. So yeah.
Never recommended them either to any of my buyer clients.
Nope.
Yep.
Antonio.
Yes, ma'am.
I put in the chat that it's another facilitator named Anthony, and I call him Antonio. So blame it on my head, not my heart.
Oh, you good?
Also, I put a book reference in the chat. Harold was trying to talk about the percentages of what you can write off if you take a business trip. That book has so many things that ordinary people may not think about, including that one, how to wrap your vacation within the business. So
Yeah.
it's in the chat.
Appreciate that. That's a good look. I see it. That's a good look.
I enjoyed your presentation too.
Thank you. I appreciate you.
Hey, Antonio, I think I'm clear now.
You are.
I was transferring from Wi-Fi to cell, so it kind of wonked out on me. One of the things I could tell everyone, every vacation I've taken since I've been a realtor, which is now 21 years, I think it'll be 22 soon. I've written off something off any trip I've taken, because one thing I do, my wife calls me a nut, but I will find open houses for signs, anything for sale, and I will go visit properties no matter where I go on vacation. On my honeymoon, I was looking at properties. You know what I mean? So, but that one worked out because it was kind of integrated into our trip, so she didn't care. But the point being, I found a way to write off every single trip, some portion of it, if not the whole thing. just so y'all know, and what the young lady mentioned, if you really pay attention, you get a good accountant, they will know these things and they will help you find a way to write off. I'm just letting you know, the one time I learned this, I was talking to somebody at a bar, at like a thing, and the guy was an investor. He and I just started talking about stuff, and he said, "Oh, all right, great, I got my write-off for the weekend." I said, "Excuse me?" I said, "What do you mean?" He said, "We just spoke about business during our outing, so I'm writing off this meal and part of my trip because we spoke about business and potentially doing business together." I
Exactly.
said,
Your
I said,
wife
"Stop."
allowed you to do that on your honeymoon. That's crazy.
Oh yeah, no,
And I
because
think,
listen, it was a villa. We was visiting a villa. You know, she didn't mind.
okay, so there's another tip where I think you make the appointments for real estate meetings like on a Friday and maybe a Sunday, so that your flight, part of your flight is covered as well.
Correct.
But it's in the book.
There's so many ways to do this, like so many ways to take advantage of this. The book she recommended, I know who that is. I've never used her, but I've been to a few things where she spoke at. She's with the Bigger Pockets team. Y'all can just look at their YouTube channel, her and her husband, and they always dropping game too. A lot of stuff is out there for free. You just got to look for it. If we're being honest, you got to find it, search it. So, any other questions before we roll?